Mastercard has been one of the market's strongest long-term compounders, but after its recent pullback, several indicators suggest that the stock may now be trading near a historically attractive valuation. Its price to sales ratio is below -1 standard deviation relative to its 2-year average, while its trailing P/E ratio has returned to a level that has repeatedly marked major bottoms since 2014. At the same time, Mastercard's earnings continue to grow. So, is Mastercard currently undervalued? And could the stock reach approximately $800 within the next 2 years? Let's look at the data. Before we begin, if you find this type of data-driven stock analysis useful, please like the video and subscribe to the Fundamental Signals. It helps more investors discover the channel and supports future analysis based on the valuation metrics and historical data. Let's start with Mastercard's price to sales ratio compared to its 2 years average. The indicator is currently below -1 standard deviation, meaning Mastercard's P to S ratio is relatively cheap compared with its recent history. Historically, this undervalued region has corresponded with meaningful pullbacks and attractive long-term buying opportunities. However, the stronger confirmation occurred when the indicator recovered above -1 standard deviation. Each previous recovery was followed by a sustained bull run. The first signal occurred in 2009. Over the following 5 years, MasterCard gained approximately 390%. The next recovery occurred around 2016 and 2017 and was followed by a gain of approximately 250% over 3.5 years. In 2020, another recovery was followed by a gain of approximately 35% over the next year and a half. The most recent completed signal occurred around 2022 and 2023. MasterCard subsequently gained approximately 55% over 2.5 years. MasterCard has now been in undervalued region since the end of 2025. The indicator has not yet fully recovered above -1 standard deviation, so the historical confirmation signal has not occurred. However, it appears to be moving in that direction. Being below -1 standard deviation identifies an attractive valuation range, but historically, recovering above that level provided stronger confirmation that the pullback was ending and a new bull run could be beginning. The stock may remain undervalued for several weeks or months, but a confirmed recovery would be a very encouraging signal. Next, let's look at Mastercard's trailing P/E ratio. The trailing P/E recently reached approximately 25 times earnings. Since 2014, this level has repeatedly acted as valuation support. Each time Mastercard approached this region, the stock was either near a major bottom or entering an attractive accumulation period. A P/E ratio of 25 may not appear especially cheap compared with the broader market. However, Mastercard has scalable business model, strong margins, and a long history of consistent revenue and earnings growth. For a company like Mastercard, it is more useful to compare the current valuation with its own historical range. Based on that comparison, a trailing P/E near 25 has represented one of its more attractive valuation levels over the past decade. Now, let's compare Mastercard's earning per share with its stock price. Over the long term, Mastercard has delivered consistent EPS growth. There have been temporary slowdowns, but the broader trend has remained upward. This matters because a declining stock price is not automatically a buying opportunity. If earnings are also weakening, the lower valuation may be justified. In Mastercard's case, the stock has experienced a valuation pullback while earnings have continued growing. Analyst estimates also suggest that EPS could continue increasing over the next 2 years. These forecasts are not guaranteed, but continued earnings growth would provide fundamental support for a higher stock price. Finally, I created two regression models. The first measures the historical relationship between Mastercard's EPS and its stock price. The second measures the relationship between revenue and price. Both models show a strong linear relationship. As Mastercard's revenue and earnings increased, its stock price generally followed them higher. Using analyst revenue and EPS estimates as inputs, the model suggests that Mastercard could trade near $800 within the next 2 years. However, this projection depends on Mastercard achieving something close to those estimates and the historical relationship continue to hold. A recession, weaker consumer spending, regulatory pressure, or valuation compression could produce a different result. So, what does the complete picture tell us? Mastercard's P2S ratio is currently in a historical undervalued region. Previous recoveries from this region were followed by a gain of approximately 390, 250, 35, and 55%. The current indicator has not yet confirmed a recovery, but it appears to be moving closer. At the same time, Mastercard's trailing P2E ratio has returned to a level that has repeatedly acted as support since 2014, while earnings continue to grow. Based on the historical relationship between Mastercard's revenue, earnings, and stock price, the shares could potentially reach approximately $800 within the next 2 years. This does not mean Mastercard has already reached its exact bottom. The stock could remain undervalued, and historical patterns do not guarantee future performance. But for long term investors, the current valuation appears considerably more attractive than it was at higher prices. Do you think MasterCard can reach $800 within the next 2 years? Let me know in the comments. And if you watched this far, please like the video and subscribe to Fundamental Signals. Your support helps me continue producing practical, data driven stock analysis. Thank you.